Hey everyone, welcome back to Stock Informer, your go-to channel for breaking down the latest in markets, stocks, and economic trends. If you're new here, hit that subscribe button and ring the bell so you don't miss a thing. Today, we're diving into some big news shaking up the US economy. Manufacturing is sliding into contraction, and Trump's tariffs are in the spotlight. Let's unpack what's happening, what it means for your investments, and where the market might go from here. So, what's the scoop? According to a fresh report from Yahoo Finance, U.S. manufacturing activity just took a hit, slipping into contraction for the first time this year. The Institute for Supply Management, or ISM, dropped a bombshell. Their manufacturing PMI fell to 49.0 in March from 50.3 in February. Now, if you're wondering what that means, anything below 50 signals contraction, and that's bad news for an industry that's been trying to claw its way back after a rough couple of years. What's driving this slide? Well, the finger's being pointed at President Trump's tariff policies. Costs are surging, suppliers are freaking out over the uncertainty, and the prices paid index, which tracks what manufacturers are shelling out, spiked to 69.4, the highest since mid-2022. That's a jump from 60 point for last month, way above what economists expected at 64.6. Translation? Companies are paying more for raw materials, and guess who's likely footing the bill down the line? Yep, consumers like you and me. Now, let's talk tariffs. Trump's been pushing this America First agenda hard, slapping 25% tariffs on auto imports from Canada and Mexico, threatening levies on semiconductors, and promising reciprocal tariffs on, well, pretty much everyone starting April 2nd. He's calling it Liberation Day. The idea? Force companies to bring manufacturing back to the US. But here's the catch. Instead of a factory boom, we're seeing demand confusion, production pullbacks, and even layoffs. New orders just hit their lowest level since May 2023. Yikes. Analysts are split on this. Some, like Harry Chambers from Capital Economics, say the tariff uncertainty isn't sparking a reshoring renaissance, it's just depressing activity. Others argue it's a short-term hit for long-term gain, banking on Trump's vision of a U.S. manufacturing powerhouse. But here's the reality check. Manufacturing makes up about 10% of the economy, so this ripple could hit everything from jobs to stock prices. Speaking of stocks, markets are jittery. The Dow, S&P 500, and Nasdaq all opened lower yesterday as traders brace for tomorrow's big tariff reveal. So, what's the play here? If you're in industrials or consumer discretionary, keep an eye on names like Caterpillar or Ford. Tariffs could squeeze margins. On the flip side, could this chaos open doors for domestic suppliers? Maybe, but the data says we're not there yet.